Trader Strategy video for Friday, January 15th. All right, guys. Well, we had a little bit of, I would say, a little bit of a pause day. Russell did really well yesterday. Transports as well did pretty good. But we want to keep an eye on this 10-year, right? I mean, look at this 10-year. We had a nice little pullback, and now we did not have an outside day reversal on the candlestick. We could see here. Let me just open this up a little bit for you. But you could see that we got a nice little move in a 10-year in the afternoon, and that kind of spooked the equity markets again and started to roll over a little bit. We saw some further weakness in big cap tech, and I tell you, it looks like they really peaked here, and that's something that we want to continue to watch, right? Want to watch these FANG stocks because of the fact that Q's, I think, is going to be one of the greater shorts because these FANG stocks are so overvalued. They're so overpriced. They shouldn't be trading where the general market should be, in addition to where the economy is, right? So watch this 10-year. I think this 10-year is going to do something pretty exciting. And also the longer term rates, the 30-year is starting to move as well. And remember, a lot of times these rates, these interest rates, the 10-year, the 30-year, they start moving when gold starts to move too. There's definitely a relationship involved in that, and we'll get into the gold chart in a minute. But let's take a look at the spiders. You see, hold on a second. Here we go. Now here's the spiders. We had a little bit of a dip lower. Really nothing to write home about. Nothing really dramatic. But we had Biden speaking yesterday on the stimulus, and all of a sudden now we're down today. So it looks like we're going to have sell the news. In addition to that, we got a frothy market, right? We got an overvalued market. We have a 3-day holiday. We have these administration debacle here. What's going on? Biden getting inaugurated on the 20th, and then we have some really FBI talking about some really nasty stuff going on. What's going to happen around the 20th? So there's some sort of plan or attack that they're talking about. I'm sure you guys have all read that. So there's a lot of uncertainty out there. COVID, 3-day weekend, probably sell into that and then see what happens on Tuesday because Monday's a holiday right here in the United States. So it's going to be very interesting to see what happens. So we had that big down day 2 Mondays ago. We had a small down day here on this coming Monday, and we just kind of drifted higher, really doing not much. And then we had a decent sell-off here. MACD, RSI are now our on-sell signals rolling over from overbought territory. Let's take a look at the Qs here. Right, and I'm looking at this market then, and this is going to get ready. We're going to start getting ready to pounce on this. 21 SMA, guys, is going to be that number. That spot on all of the indexes needs to hold here. That right here at that 311. 311 is a bigger area. We'll talk about that once we break below that. But then, of course, the 50-day moving average will come into play at 30204 for now. But let's see. Let's get us down below that 21 SMA. Then we'll start putting some retracement numbers here, as well as watching these areas here where we have some gaps in pretty much all of the indices. Right. Let's take a look at the Dow. And Dow has a very large gap here, and that's something that we're going to be watching very, very closely. And you can see here we're kind of way away from that 21 SMA where we were not in the Qs, right? So the Qs are definitely weaker than the other indices now, where it was the main driver going from March up until about September, October, and then we went sideways with the FANG stocks until now. So now let's see what happens. Getting that 21 SMA is going to be that spot 305.35, okay? That's going to be in the diamonds. Let's take a look at the Russell 2000 IWM. Now, if this is not a frothy index, I have no idea what. I mean, listen, I love the Russell 2000, but I wouldn't even touch it up here, not even close. I mean, they just kept buying it yesterday, and all little lot sizes, little tiny lot sizes. So here's a little spot here. Be very careful. This is going to be the first area that we're going to be looking to see. Obviously, that 21 SMA is going to be key at 273, and then down below here, we're going to get that other spot down here to be watched. We're going to be watching that very, very closely. I think that once we get this market to roll over, these indexes, especially a Russell 2000 and these frothy indexes, balloon's going to pop. And I think we're going to see the market really start to roll over. Now, I want to talk about the RSI a little bit, right? And when we have an overbought index, look, we've been overbought, right, since pretty much November, right, when we had that first gap up. And we had if I bring this chart in, you could see how frothy this index is from the March lows of last year. I mean, this is really kind of crazy, right? But we did have some sideways consolidation, which supported the move higher, right? Even though we were overbought here, right? But it supported the move higher, and it can stay overbought for quite some time, as you can see here, right? And as long as you're hugging at 28, 21 SMA, you're in really good shape. And that could be a stop indicator for you guys as well. I like to use the 8. It's a Fibonacci number. I like to use the 8, sometimes the 5, and then trail that on a daily. Okay, or you can dial it down to a 60-minute if you wish. All right, so now that 273, that's the other area here that we're going to be looking for. Now, I do want to talk about gold GLD because the gold and interest rates, they're very similar. Now, remember, they lag. Interest, gold, and any type of relationship is not going to be one correlated, right? One correlation is number one is the most, right? And the timeline might be behind a little bit, right? So we might be, let's say, here, and now gold has peaked, but the interest rates sector has not peaked because we're still following gold, right? So now it looks like that gold here is sitting on that 200-day moving average, but we want to pay attention to that because when we see gold either break higher, okay, that means that I think interest rates are going to rise. I think interest rates have bottomed. At least let me talk about the 10 years since we've been on that. But I think interest rates have bottomed, and I think we're going to see an increase of interest rates. We're also going to see some of these bank stocks reporting. JP Morgan reported better than expected earnings early this morning. So let's watch these bank stocks. But remember, these bank stocks now have really kind of made their run. And I think it's probably going to be sell the news, take some profits, let the bank stocks get clobbered again, get back down to a certain area, and then we look to buy these bank stocks because they are going to benefit from an interest rate sensitive environment, right? So just for instance, let's just take JP Morgan here. JP Morgan doing very, very well, as you can see. And also a lot of these, they've taken out the March highs here, right? Take a look at that before Corona. Now, JP Morgan did very well because a lot of the major city center banks, the major banks, they also they do well when they have a big trading area, right? So when they have a good trading department, JP Morgan, obviously Goldman Sachs, they're going to do very well in a good volatile environment. So this is a great stock to look for, but not here, guys. I mean, I'm not going to touch this here. But we're looking for JP Morgan. I mean, look at Citibank. They have a decent trading department. It's doing very, very well. I mean, Wells Fargo, one of the crappiest money center banks out there in the country, it hasn't gotten to that point yet. But now, right, this is going to be more of a short play, right? Meaning a short squeeze play, I should say. Excuse me, let me rephrase that. Why? Well, because this is the most hated bank in the country, and now the short's going to have to start covering here, and that's what they're doing. But we have a gap here, we have a gap here, and we have a gap down here. I'm not saying this gap's going to get filled right away, but would you rather buy it lower rather than higher? And that's really what it comes down to. A lot of these institutions are always going to buy lower. They're going to buy on weakness and sell on strength. That's just how it works. Okay. The last thing I want to talk about is the XLE, and we had XLE for 3 months had been the leader of the group, and that's where we find some stuff. And I've talked to a lot of our coaching subscribers, and they've been really on this XLE, and I mean the sector in general. And hats off to you guys. That's fantastic. I've been doing a lot of trading in the oil squadron, and I love the energy sector. I traded a lot. I think it's a great instrument to trade. A lot of the oil names, the integrated oils, very, very popular. CVX, Phillips 66, Chevron. You have your oil services and the drillers. So there's a lot of good plays out there to keep an eye on. I want you guys to watch out for. Okay, that's pretty much it for going into today. Let's see if we continue some weakness going into the opening. I think it's going to happen. Why not? Let's let the market digest, pull back a little bit. I mean, you can't just keep going up until you get a big risk off event. Then the markets really just get clobbered all day, and then maybe 2 or 3 days. But we'll see what happens going into next week. Enjoy your long weekend. Be safe out there, and then we'll see you on Tuesday.